The financial position of two companies, Hari Limited and Vayu Limited, as on 31st March 20x1 was as under. We are given goodwill, building, machinery, inventory, trade receivables, cash and bank. Yes, in liabilities, they are saying equity shares of rupees 10 each. Equity shares are of 10 each. So if I just remove that, it means I have 1 lakh shares over here, and here I have 30,000 shares, and 9% preference shares of rupees 100 each. 100. So 1,000 preference shares are there, and here also 1,000 preference shares are there, right? So that's the basic information that we have. General Reserve Retirement Gratuity Fund. See, they've used the word fund, but don't get carried away with it. It is for retirement gratuity. So although it is a fund, but it will not be a reserve. It's actually a liability. And then trade payables. Okay. What are the terms of amalgamation? They are saying Hari Limited absorbs Vayu. So Hari Limited is purchasing company and Vayu Limited will turn out to be the selling company. They are saying 10% preference shareholders are to be paid 10% premium. So we will settle them at a premium. Goodwill of Vayu is valued at 50,000. Okay, just a second. In the balance sheet of Vayu, 25,000 goodwill is given. Ignore that. We will consider goodwill now as worth 50,000. Buildings are valued at 1,50,000, machinery at 1,60,000. So these are agreed values, right? These agreed values matter to the purchasing company. So purchasing company will record the assets at the agreed values. Inventory is to be taken at 10% less value, so inventory will be reduced by 10. And they are saying provision for doubtful debts to be created at the rate of 7.5%. So whatever trade receivables are there, we will reduce it by 7.5%. Equity shareholders of Vayu will be issued equity shares at 5% premium. This is really an important set of, what I can say, information given. See, till now, they were always giving us some share exchange ratio. And then using the share exchange ratio, we were working out the number of shares that we have to issue. This time, no such thing is given. What is the number of shares to be issued? That they have not given to us. What is the share exchange ratio? That also is not given to us. They simply say equity shareholders will be issued equity shares at 5% premium. Don't do it in this way. That we see the share capital of the selling company. Okay, the share capital of the selling company is 3 lakhs. So I add 5% and settle it. No, they are not saying equity shareholders will be settled at 5% premium. That is not the word. They are saying we will issue shares at 5% premium. How many shares are to be issued at 5% premium? That needs to be calculated. That itself will be our first major working note. We will have to find out what are the number of equity shares which are required to be issued by Hari Limited. Right. What are the questions? They are saying prepare necessary ledger accounts to close the books of Vayu, so ledger in the books of the selling company. Acquisition entries in the books of Hari, so journal of the purchasing company, and then the balance sheet. It's a pretty full-fledged question. We will have to close the books of the selling company, record the initial accounting entries in the books of purchasing company, and then also prepare the balance sheet of the purchasing company. But before everything else, we will have to get the number of equity shares that we are going to issue. This calculation is necessary because without this, I will not get the purchase consideration. Until I do not get the purchase consideration, I cannot record the accounting entries. Even when you are closing the books of the selling company, first we will transfer the assets to realization, then you will transfer liabilities to realization, but then you will have to record for the purchase consideration due. You will also have to record for the settlement of purchase consideration. This will not be possible till we do not know what is the amount of purchase consideration. So we say determination of number of equity shares to be issued by Hari Limited. Right? I'll have to work out how many shares we are going to issue. Now, how will we be able to decide that? We will issue equity shares in such a manner that the intrinsic value belonging to the equity shareholders in the net assets is getting satisfied. Right? See, the purchasing company will take over the selling company, so it will take over the net assets. So the net assets will represent the intrinsic worth of the company. So what is the intrinsic worth of the net assets that belong to the equity shareholders? That is the key to get the number of equity shares. So we will make a list of the assets which are going to be taken over by the assets which are going to be taken over by the purchasing company. And since we are doing it from the viewpoint of purchasing company, we should consider the agreed values. So goodwill, we have agreed for 50,000. Agreed value of buildings is 1,50,000. Machinery, 1,60,000. Inventories. Be careful with the inventories. We have decided to write it down by 10%. So 157,500. Trade receivables. Trade receivables are 1 lakh. We are writing it down by 7.5%. 92,500. Cash at bank, 20,000. Let's take a total. Deduct the liabilities. Remember that retirement gratuity, although they use the word fund, but it is not a reserve, it's a liability. 20,000. Trade payables, 80,000. Work out the difference. This will give us the intrinsic worth of the net assets, 5,30,000. If you're still unfinished till now, you can pause the video and reach till here. We do have the intrinsic worth of the net assets now. What we will give to the preference shareholders is already clear. So we say less settlement of preference shareholders. Okay. I will like to read the question now for preference shareholders. Preference shareholders, 10% premium, simple. So if I see the preference share capital, it is 1 lakh. Yes. Be careful. We will be elaborate. We say 1 lakh. Settle at 10% premium. So we are giving them 1,10,000. We'll issue our preference shares at a face value of 100. That means we are issuing 1,100 9% preference shares of Hari Limited at the rate rupees 100. Is 1,10,000. Right, 1,10,000. Difference 4,20,000. This is payment to equity shareholders. Right, the total intrinsic net worth is 5 lakh 30. Out of that, 1 lakh 10 will go to the preference shareholders. So equity shareholders must get 4 lakh 20,000. This I divide by issue price per share, right? They are themselves saying we will issue shares at 10% premium. Face value of, 5% premium. Face value of the share is 10 and we are ready to issue our shares at 5% premium. So that turns out to be 10.5. So 4 lakh 20, I will like to divide by 10.5. It is turning out to be 40,000. New equity shares to be issued. So 40,000 equity shares are needed to be issued. Now see, 4 lakh 20,000 is payment to equity shareholders. 1 lakh 10,000 is the payment to preference shareholders. We know what we pay to equity shareholders and preference shareholders, that total is nothing but purchase consideration. So in a way we can say that the purchase consideration is 5 lakh 30. So 5 lakh 30 is purchase consideration, and whatever we are showing under that, that is the discharge or the settlement of the purchase consideration. Right? You can pause the video here. If you are still writing, pause the video. So I can now start preparing the journal of the selling company. So say books of, yeah, selling company is Vayu. So Vayu Limited. I shall open first the realization account. Right, let's prepare the realization account. We will transfer the assets to the realization account. See, aggregate value of goodwill is given, building is given, machinery is given, but this is all relevant only to purchasing company. Whenever you close the books of the selling company, you have to remember one thing: accounting entries in the books of the selling company will be always at its book value. Okay, so just see the asset side of the balance sheet and start transferring the assets to the realization. Your accounting entry will be realization account debit to the different assets account. So goodwill transferred, building transferred, machinery transferred. We are recording at their aggregate values. Keep on transferring the different assets to the realization account. Transfer the liabilities, liability account debit to realization. So assets transferred to the realization, liabilities transferred to realization account. The third accounting entry is for the purchase consideration due, right? Purchasing company account, debit to realization. Realization is getting credited by Hari Limited for the purchase consideration. 5,30,000. That's what gives rise to a new account. Now we will say Hari Limited account, isn't it? Hari Limited account. Hari Limited account, debit to realization. So I'll say to realization account, 5,30,000. My next accounting entry is for the settlement of the purchase consideration. What are we getting in return? Equity shares in Hari, preference shares in Hari from Hari, right? So on the credit side, we say buy equity shares in Hari Limited account, 4,20,000 by 9% preference shares in Hari Limited account, 1,10,000. That closes this account. 5,30,000, 5,30,000. We now prepare preference shareholders account. So preference shareholders account. Preference share capital account, debit to preference shareholders account. So by preference share capital account, 1 lakh. To them, we will give the preference shares in Hari, to preference shares in Hari Limited. Preference shares in Hari are worth 1,10,000. I get a difference which will be debited to the realization account. So realization account, 10,000. This closes preference shareholders account. Preference shareholders are getting 10,000 more. Say to preference shareholders account, 10,000. The extra money that we are paying to the preference shareholders, it's a loss to the equity shareholders. That's the reason. And finally, the final account, equity shareholders account. Equity shareholders account. Say by equity share capital account, equity share capital account, 3 lakhs, general reserve account. Right, these are the reserves and capital which belong to the equity shareholders. I need to close the realization now. The credit side total is higher. 6,30,000. Also 6,30,000. Difference is 50,000. This 50,000 is gain which belongs to the equity shareholders. Shareholders account. Right, there's a gain on realization. So I will take it to the equity shareholders account now. by realization account. By realization account, yes, 50,000. Settle them. Equity shareholders account, debit to equity shares in Hari Limited account. Equity shares in Hari Limited account. 4,20,000. If everything is right, your account will tally, and it does tally. Books of the selling company Vayu Limited are closed. So that's the full glimpse of realization account. Anything left to be done over here? Pause the video, complete it. Hari Limited and the preference shareholders account. Is anything left here? Pause the video and complete it. Finally, equity shareholders. We shall now prepare the journal of the purchasing company. Journal of Hari. My first accounting entry will be with respect to the business that we have purchased. So business purchase account, debit. With the purchase consideration, 5,30,000 to liquidator of Vayu Limited, 5,30,000. And we will now incorporate the assets and the liabilities. You know, this earlier calculation that we had done, here it is. This is actually your accounting entry. This is your actual accounting entry. Goodwill account debit, building debit, machinery debit, inventory, trade receivables debit, cash debit, to retirement gratuity, to trade payable, to business purchase, 5,30,000. It is this table only which I have to fit into as an accounting entry. Get it? Goodwill account debit, 50,000. Building or buildings account, whatever you say, 1,50,000. You have to just incorporate that table as an accounting entry. 1,60,000. Interest 157,500. Trade receivables. You can record trade receivables at the full amount and then create a separate provision. I will continue with the figure which was there earlier. There is no need to leave any line blank this time because the accounting entry itself will tally. We know that. Since we had prepared this statement earlier, we know our accounting entry is going to tell you. Because when we prepared that statement, we started with goodwill itself. Normally what happens is we have to balance the accounting entry and find the figure of goodwill or capital reserve. But here goodwill is already given. Then how will you balance it? It's already there, right? Yes, if you're still writing, just pause the video here. We put our final accounting entry now, where we will settle the liquidator. Liquidator of 5 limited account debit, 5,30,000 to 9% preference share capital account, 1,10,000, isn't it? To equity share capital account. We have issued 40,000 shares and our face value is 10. 4 lakhs. To securities premium account. We have issued shares at 10.5, so that 0.5 is the securities premium. Right. So these are the accounting entries, acquisition accounting entries in the books of the purchasing company. And now it is time to prepare the balance sheet. So we say balance sheet of Hari Limited, 31st March 20x1. I believe that's the date, right? Date, yes, 31st March 20x1. We prepare the format of the balance sheet. Equity and liabilities. Our first head, we have done this many a times now, shareholders funds. Share capital. Reserves and surplus. 1, note 2. Non-current liabilities. We have here retirement gratuity, line by line addition, 70,000. Current liabilities. Trade payables, line by line addition, 2,10,000. Total debit. For the assets, non-current assets, property, plant, and equipment. Let's prepare a note. Note 3. Yes, goodwill is there. Line by line addition. 1 lakh. Right, our 50,000, and for the selling company 50,000, not 25. Okay, we have valued the goodwill of the selling company at 50. Current assets, inventories. Our inventory is 2,50,000, and the aggregate value of the other company is 157,500. So 4,07,500. Trade receivables. Our trade receivables is 2 lakhs. The other company valued at 92,500. Cash and cash balance. R 50 and 20 of the other company. 70,000 total. Time to prepare the notes. Share capital. Under that, equity share capital. Equity share capital. We have 1 lakh equity shares. We are issuing new 40,000 equity shares. So 1,40,000 equity shares of rupees 10 fully paid up. So our equity share capital is 14 lakhs. 9% preference share capital. 9% preference share capital. We have 1,000 preference shares and we have issued 1,100 new preference shares. So 2,100, 9% preference shares of rupees 100 fully paid up. 2,10,000. 16,10,000. So we go to our balance sheet, and against note 1, we place 16,10,000. And for the second note now, Second note is for reserves and surplus. Reserves and surplus. Ask yourself, is there any new reserve that we are creating? Yes, we do have. Securities premium, 20,000. General reserve from the balance sheet, but only our own general reserve. You have followed the purchase method. In purchase method, we cannot take over the reserves of the selling company. And in case if you are wondering that how does this become purchase method, see, it is purchase method. You recorded the assets and liabilities of the selling company at the agreed values, not at the book value. You created goodwill account in your books. So we are ready with the equity and liabilities. We take a total 19 lakhs 80,000. Okay, that's the balance sheet total. Final note, property, plant and equipment. Note 3, property, plant and equipment. We say buildings. Our building in balance sheet is 3 lakhs and the agreed value for the selling company 1 lakh 50. So we have 4 lakh 50,000 of buildings. Machinery. Our own machinery is 5 lakhs and selling company 1 lakh 60, 6 lakh 60, 11 lakhs 10,000. We go to the balance sheet. Note 3, 11 lakhs 10,000 is what we post in the balance sheet. Take a total 19 lakhs 80,000. Pause the video here. If anything is left for equity and liabilities, pause the video here. For the assets, pause the video here. For the note on share capital, and finally pause the video here for reserves and surplus and the note relating to PPE. This is the last piece of our solution.